Hi, hello everyone. Good evening to all of you. Ladies and gentlemen, this is Ashok Devanampriya. I am the CEO of Traders Gurukul and Status On. On behalf of Traders Gurukul family, am extremely honored to welcome every one of you to Intrazon 2.0, India's largest retail traders online conference. I feel privileged to see people joining us every day in thousands of numbers in pursuit of knowledge because the theme for this entire conference is intraday. 100% intraday models and strategies have been discussed in this particular event so far and also in the next 6 sessions. So please join me in thanking the colleagues, management and leadership of Money Control Pro for joining us as media partner and believing in our ability to make great conferences which is of true value for traders and investors. Let's also appreciate our title sponsor Espresso, one of the leading discount brokers in India from the family of Sher Khan. The uniqueness of their business model is they never charge brokerage for your loss-making trades. Friends, the speaker for today is my good brother Varun Danturti from Nagpur. He is an electronics graduate with an MBA in finance trading markets for close to 6-7 years now. He is a SEBI registered analyst. He's practicing financial advisory for close to 9 years now. He was a discretionary trader. He trades trend mostly while trading intraday. His focus is mainly on breakout and breakout failure trades. Along with intraday trading, he also does positional trading. His session for today is taking advantage of trap trades in intraday. Dear Varun, on behalf of the family of Gurukul, Money Control Pro and Espresso, I extend my warm welcome to you into the program as a speaker. Go ahead, excite our audience with your session. The stage is yours.
Thank you, Ashok. First of all, I want to thank Traders Gurukul, Straddle, Money Control Pro, and Espresso, a Sher Khan company, for giving me this wonderful opportunity to connecting with thousands of traders online. And I would like to take this opportunity to share the trades which I basically take in intraday trading. Right, as I said, and as in fact Ashok said, that the session is going to be on taking advantage of trap traders intraday. So let's jump in and see what this session basically holds. And I hope that at the end of this session you take out some value from your valued time. So let's begin. Right, so we'll see how we will be taking advantage of trap traders intraday. Maybe 2 to 3 minutes introduction about me. I am Varun Danturti. I'm basically from Nagpur. I am a active financial advisor and a SEBI registered research analyst. I've been analyzing and trading markets since 2013-14. I am BE Electronics Engineering and also MBA in Finance and Banking. Currently, along with intraday trading, I'm also working on setting up a system for positional trades. For intraday trading, I use VWAP extensively, and I put almost all of my trades on Twitter on a regular basis. I have developed a intraday method by observing many charts and price behavior, to which I call intraday VWAP breakout failure strategy. And short form, I call it as VWAP trades. So basically, those are all breakout failure trades. I regularly conduct webinars on VWAP trading, and I also do one-to-one mentoring. Standard disclaimer before we begin: trading involves a lot of risk, and one can lose all the capital. And this presentation should be best taken only for education purposes, and one can safely assume that I am using the method discussed in the webinar to trade my own capital. It is always prudent to carry out due diligence and assess your risk before taking any trade based on the methods which we are going to discuss. And method discussed is only a template, which means that you can work around it and see which formula or walk around suits you better. And these are all my observations, and any similarity found with the methods discussed with the participants or other participants are already participants which are already using can be purely coincidental. Ashok, if you can just talk
Yes,
about.
so friends, just to reiterate the fact that the title sponsor for Intrazon 2.0 is Espresso, the Sharekhan company. Okay, it's a great pleasure to have them on board. The specialty is that they don't charge brokerage for one leg of the loss making trades. Thank you very much.
Yeah, thank you, Ashok. So taking advantage of trap traders intraday, I call it the breakout failure technique, that is BOF. So the first question which obviously would pop up is what is a breakout, and how this is a definition of how I look at it, and what is the breakout failure. So this is the basic example, or sorry, this is the basic definition of what a breakout is as per me, and what do I look on the charts if I have to say that this is a particular breakout. So a break from previous day's VWAP, which I called PVWAP, which is more than 1.5 times the ATR on the trading time frame, is a breakout for me. Right now, if the above move does not sustain, it's a potential BOF. Now, why I say potential BOF, that I'll explain in further slides, and we'll see in our charts also. Right. So to reiterate, a break from previous day's VWAP, that is the PVWAP, which is more than 1.5 times the ATR on the trading time frame, is the breakout. And if the above move does not sustain, it's a potential breakout failure. Right. So here on the chart, some studies would be required, and I'm quite sure that all the studies which I'm going to mention here uh, would be available with all the brokers and also the Espresso software. First is the VWAP. Second, we would be requiring the RSI 14 period marked at 18 and 80 and 20. We require the ATR. We require the previous day's VWAP. So basically, previous day's VWAP is not a separate indicator or something. It's just a horizontal line which you need to draw from the 3:30 p.m. closing price. So that I will explain on the chart. We can do it on any time frame, but for intraday, I prefer 3 minutes. You can also practice it and jot down your observations on a 5-minute chart also. So just a basic about what is VWAP and its importance. So VWAP, I won't go into detail because most of you may have just googled it on the net, and you can still do it and just see what a basic VWAP is. So VWAP, or volume weighted average price, can be the most important technical indicators for day traders. It is a moving average that takes into account the volume of shares being traded at any price. So this is the basic formula where the summation of volume and price is done, and it is divided by the volume to arrive at VWAP. So thankfully, we need not do it on a Excel on a day-to-day basis. There are softwares obviously which provide the VWAP indicator. Basically, it is a short-term indicator, and I don't use it on time frames above 15 minutes, because what I've seen is above 15 minutes you may not get that good results. So it should be used below 15-minute time frames. I have seen people using it on 1-minute charts also, and it's perfectly fine. And if you have a strategy which I will discuss, if you can implement it on 1 minute, then even on a 1-minute chart the VWAP can be used. Other moving averages are calculated based only on the price of the stock, but for VWAP, the volume into price, its summation is divided by the volume. So other moving averages will move, or decrease as and when the average of the past 4 or 5 candles, depending on the period which you have taken, changes. But on VWAP, the volume also has to increase or decrease for the VWAP indicator to move upside or downside, that we'll see in the charts. So VWAP is an indicator which basically shows who is in control of the price action, buyers or sellers. So typically above VWAP, it is considered bullish, and it is said that buyers are in control and vice versa. So below VWAP, the bears or the sellers are in control. Now, let's speak about the logic behind the setup. The basic premise is acceptance or rejection of a certain price action in the market. So at a particular range or whenever the market opens, whether price is really getting accepted at that area or not, that is the basic logic behind which this whole setup is being created. Now, if the price is not getting accepted at a certain area, now what that certain area is, we will look it in the charts. So if the price is not getting accepted at those areas, prices usually revert to the mean. Now, this is where we jump in, and we would be trying to take advantage of those trapped traders, which I also called, panicked or stunned traders. Why panic or stunned? Because price could be heading at a particular pace to a particular target, but at that target, there is some structure forming, which I will show you in charts, and some resistance is hit there, and all of a sudden the price starts reversing. I'll give you one example of Nifty, which happened today. And at that moment, people are just not ready to accept what is happening on the screen. And when prices start reversing from their original position, they are basically stunned and they are frozen. They basically cannot do anything. So that is where our screen awareness or our chart reading comes into picture, and we can take advantage of those trapped traders. And the order flow from the trapped traders is always going to be huge, because as you know that there are two emotions in the market, fear and greed. And in case of trapped traders or BOF, we are taking advantage of the fear. And fear as a emotion works much better in making money as compared to greed. So all this we'll see in the future charts. So when I say reverting to the mean in the third point, I mean that the prices revert to the previous day's VWAP. So this is my observation, that whenever there is a BOF, that is a breakout fails, prices most of the times revert to the mean. And for me, mean is previous day's VWAP. So we'll come to the chart setup. Yeah, this is a basic chart setup. If you want, you can take a screenshot, print screen, where I have shown the chart setup on a 3-minute chart. Right? This can be done on a 5-minute chart also. So this line which is running through is the VWAP, right? Which is the summation of volume and price divided by price. Correct. So we will consider only this part, right? So in the studies, I said that we would be requiring VWAP. So this is the VWAP which is being plotted. We require the previous day's VWAP. So this is nothing but a horizontal line from last day's 3:30 p.m. closing of the VWAP. So if you draw a line horizontally, you get the previous day's VWAP, which I call the P VWAP, right? We have the RSI here. As I said, RSI 14 period with 80 and 20 as the markings. Why 80 and 20? I'll explain in charts. Right, and default ATR 14 would be plotted. As I said that, we would be looking at prices moving at least 1.5 times more or above than the previous day's VWAP. So I'll explain that in the charts. And this is a 3-minute chart. You can use a 5-minute chart also. Right. Yeah. So the setup rules now. Now there should be a breakout in this instrument, right? So my definition of breakout, to again reiterate, is there should be a break of price from the previous VWAP at least 1.5 times the ATR. Right. So as I said, difference between the previous VWAP and the current price should be more than, or at least more than 1.5 times ATR. In case of breakout, now the first close below the VWAP is the action candle. Right. So suppose the breakout has happened. Now we will be ready for the breakout failure if we see any particular structure at that point. So the first close below the VWAP is going to be our action candle. Whenever there is price printing below that action candle, our trade would be triggered. RSI should start declining below 80. Right. Now, SL can be the recent high or can be modified as per the risk appetite. Now, why I say risk appetite is, we'll see in the charts, because sometimes what happens is whenever there is a break of the VWAP, sometimes that candle is a bit bigger. So in that case, you can have the high of the same candle as a SL. Otherwise, you can have the recent swing as the SL. Always, I look out for my first target as 2 times risk. Right. So, for example, if my risk is 80 points, maybe in Bank Nifty, my first target is always twice of that. And if I am trading multiple lots, then at least half position I take out at 2R, and rest can be trailed as per the systems which we follow. Right. So now I'll explain some charts. Right. So I have jotted down some dates, and also, if time permits, we can take other dates also. And don't be under the impression that he has handpicked some dates. We can just scroll through Nifty and Bank Nifty charts, and we can find even more breakout failure trades. That should not be a problem at all. Right. So I'll take today's Nifty if example. Ashok bhai, all well till now?
Yes, all is well.
Any questions? If we can take any, or shall I continue?
We can continue. We can take the questions at the end.
Great. Right. So this is a setup on TradingView, and I think same can be replicated on Espresso charts also. And Espresso team will help us for doing that. Right. So this is Nifty today. Right. So see, we use the candlestick charts. Along with that, we plot the VWAP. Okay. We have the RSI, which is marked to 80 and 20. We have the volume panel, and also we have the ATR. Right. Now, as I